Good evening, guys. Ken of Tortoise Capital, nightly strategy podcast for November 30th, 2020. Where did this year go? My goodness. All right, let's see what we got today. Couple things jump out at me here. The first thing that really strikes me here is that we have a slightly lower low. On this section, and a slightly lower high. And we closed lower than we opened. And we made a round trip to the bottom of the dragon and recovered at the top of the dragon. So you could argue that this was mostly noise today because we're still stuck inside of this range we have a lid on it, from the 10-day and the 30-day high. Couldn't break out of that. But what struck me was just how broad the weakness was today. And in some of our strong candidates from swings like Tesla and Clean Energy both could not maintain today. Things like Nikola and Neo also suffered. And we'll see that when we get to the sectors. But this was not an auspicious start to the week, in my point of view. So is this noise, or was this the first warning shot? In the post market, SPY was pretty good, in the aftermarket. So we'll see how that works in the morning. But this was not the kind of a strong move up that we were hoping to see. We were hoping to see it just would come through and then just be decisive. But today was a day that I took some money off the table in the swing trades. I sold half of my Tesla and did an intraday move, but I elected not to restore the second half of the swing on the basis of weakness that I saw this afternoon. So that was really preserve half the swing and then take a tactical opportunity intraday, but do not put my same risk back on. So we've got the PSAR still cranking its way northward on this pathway, but you'll notice that the RL30, this black line that has been marching its way northward. Now notice, ever since this nice move began, everything was north and west of the RL30 until today. All the closes were on the northwestern side of this line, which is favorable. That would be in the A category. We moved into the B category today, with things weakening. This was really the first close on the wrong side of the RL30 for a while. So I'm worried about this. I'm worried about this rolling over right here and making this play back here to the Bollinger Band mean. That would be symmetrical with this move here. So the next, broad indicator would be well, we got the dragon is going to look like this. So, so the dragon is the next level of support over here. So we're going to call that like 360. So 360 to me feels like a psychologically important level in the S&P. So we're at 362, so that's still less than 1% away from this next psychologically important level. And so if this bottom of the dragon can hold, and this thing just kind of cruises up and stays in the B category, I would say the B category is in this range in here, between the PSAR and the RL30. This bottom side of the bottom skin of the dragon right here is going to act as an important support as well. So it's almost like a B minus in here. And then if it crosses here, it's definitely a C. And so tomorrow that price is 355. That doesn't seem like it's in reach, but you get a couple days like this, and that could come down and test. So you can look where we are right here at this price level. Yeah, it could drop that far in one day. It has right here on that day. So the PSAR is, I would not let it go below that PSAR plus one tomorrow, 355.5, call it 356. The upside is easy to see. Again, all it has to do is get through this 10-day and 30-day high at 364. So that's how critical this region is in here right now. That region in here is pretty critical. Let's try that again. So the dragon's going to be key support in here. A little heartbeat there. Sorry. The PSAR tomorrow is within range because we've seen this same kind of price action here. So it can get to here in one day. It already has. So on that kind of day, to me, that's why the bottom skin of this dragon feels to me to be really kind of crucial. That's why I'm saying 360. I'm not letting my positions go below 360. And this testing of the downward price action today is why I took that. I basically took half off Tesla and Bitcoin, which gapped up 23% at the open and then started selling off. I took that one off the table. And PBW, which had been at 99, we had a sell rule at 95, and today it breached 92 and recovered. So there were two opportunities in here to make bank on PBW. So I'm out of PBW. I'm looking to get tactically back into it, but I feel like that initial run is done. So this long-term grind right here is the one that really is the most conservative treatment of this trend up, right? So if this is an A and this is a B, that's the line that says it's not any good anymore. Then your Bollinger Band mean is going to look something like that. So now the question is, if it can go here, then that's great. If it starts failing here, it's how fast. So I feel like we're in the early stages of a critical state forming. I would love to be wrong. I would love to get back in some swing trades. But right now, the excessive gains that we've seen on the weekly charts, I needed to take some risk off today. Okay. All right. Let's look at the sectors and see what worked. All right. So we have the S&P today was down 0.44. Treasuries were slightly better, down only 0.12, still right at that key level of 160. Then diamonds were down 0.88, and the Russell down minus 1.8. So the winners from last year, the ones that, or last week, I should say, the winners from last week that were poised to pull us higher and we're at all-time highs and really cranking, not so fast, down 2%. Let's take a look at the things that suffered, since we're in the negative tip here. Consumer discretionary, down minus 0.6. Oil, minus 0.8. Materials, 1%. VIX, Mexico, Virgin Galactic Space, Finance, Brazil, all down 1.9 to 2.3. So very broad-based weakness. On all the speculative strength leaders, these were all things that we were looking at as potential upsides, that if they started going, it could be great, but every single one of them got smashed today. Emerging markets, same thing, 2.6. Japan, minus 2.7, 2.8. Simon Property and Clean Energy down 3.5. Yeah, so PBW now is under 92, so that's off 7% already from that swing high, which is up near 100. So when these asymptotic moves crack, they can crack fast. Energy down 5.5. Oil exploration 6.6. We talked about that this weekend, about the potential in energy, and we looked at both sides of that one, and the downside was the one that, as you'll recall if you were listening, more reasonable. Now, things that got smoked today, the anti-Teslas, Nikola minus 27%, Trader's Delight. Neo 6.5. Devon Energy down here along with the regular energy, and DuPont 5 1/3, 4.5. Tesla down 3%, and that's troubling because it did have a gap up, so it was up around 610 today. So that's an intraday 10% sell-off. So it looks bad at 3%, but when you realize where it was, not so much. I'll show you my trade on that today in a minute. Alcoa 2.8. I wish I'd have gotten more of the afternoon trade on that. Holy smokes. Boeing 2.6. Nucor, Cliff, and U.S. Steel, all part of the materials slaughter today, down 2.5. So materials were down 1, but the metals were all down 2.5. Even Google took a hit at minus 2%. All right, let's look at the upside. So again, the S&P minus 0.44. Silver was flat. Healthcare and Wheaton up 1/3. Triple Tech was up, the Keys was up 0.5. Broad Tech up 0.67. So the triple Broad Tech was up 2%. The Ackman Fund up 1%. And that was it for sectors, really. And then there were just a few isolated cases that resisted the sell-off today. And that's why I'm so concerned about tomorrow, the rest of this week, that this is starting to, old slow and steady Biden can't do anything, for 2 months. And Trump, if he does anything, is self-destructing. And COVID is just getting worse, and all the holiday cheer is over. And all of the reports are saying that people that traveled and people that did a lot of shopping are the ones that are becoming the new cases. So there's not a lot of joy in Mudville right there. So the winners, Bitcoin, 23%. I took that off the table today. Apple 2%, Intel and Nvidia 1%, or 1.9 and 1%, I should say. Walmart on strength of holiday sales, Home Depot 0.5%, Procter 0.2%, and that's really it. So there, at least in our stack, there just was nothing much to choose from, and so I shifted to a defensive orientation today. So let's look at. I just had a couple trades to share today. The first one is an example of Core and Turbo. Excuse me. So I want to maintain a swing position in Tesla because I'm in from 380. But I'm not going to maintain that swing position at any price. That there comes a time when, enough is enough and cooler heads must prevail. And let's see if we can pull up the longer term on Tesla just to refresh our memory what that looks like. Had a nice bounce in the aftermarket. That's what the afternoon trade looked like. From 585 to 560. That's a 5% sell-off in 1 hour. That's how vulnerable Tesla is. You can see there was quite a bit of buying down here, though. And that's what contributes to the after hours. Yeah. So it got as low as 550, ran up to 597, and is now settled in around 590 once more, but the VWAP remains at 581. So tomorrow is going to be fireworks in Tesla. We're going to see who the strong hands are. I took half off today. I am not courageous. So this is the move that we're looking at in Tesla right here. So this thing got as high as 610 today. It closed around 580, gapped up, peaked at around 610, and then started selling off. And I took some off the table here. I took my half off the table at 595, and then took another half off, as we're going to see in a minute, and then did an intraday SSC trade, but then elected not to hold this thing. So we're going to. That's the post-market. That includes the post-market data. If you just show the regular hours, you can see that's the kind of day that it was closing at. And then there was a lot of shares transacted at that price. All right, so for me, the trade looked like this. So I want to maintain the swing position in Tesla again, but not at any price, because we're long from 380. So here was the gap up, came as high as, I guess maybe, no, 605, I guess was the peak. When it came back through and gave the RLXD and through the VWAP and through the RL270, I just felt like that was enough. That was a psychological number at 600 for me. And as it's approaching the Bollinger Band mean, I just said, just let me take half. I would like to put that half back on if I can get a better price sometime, but we'll see. It sold, rejected the VWAP, and the Bollinger Band mean got lower. Right here, it was at 585, and I said it's already $20 off the intraday high, which is a 3% sell-off from the high. I said, you know what? I'm just going to cash the remaining half of the swing trade, so I'm all out of Tesla by that point. So now I've got cash from that, and then I noticed this, a perfect SSC setup, and I can get some back now at 565. So I'm buying a core and a turbo position here, meaning that I'm trading with intraday size. And so my risk is like, see, I'm long at 563, and my stop's going to be at 557. So let's call it $8. So that's like 50 shares. And my intention is that I'm going to keep 1/5 of that. I'll keep 10 shares as a swing trade on a $400 risk per trade. But that one doesn't, it hits the VWAP and starts to back off. So what I do is I cash the turbo position, the intraday position. And so that's the move from, that's like 563 to call it 580. That's $17 on 50 shares is about $800 or $900. So it pays for the swing position that I want to maintain. So my intention is to hold that as a core position, and I'd like to see that thing continue to go up. And if it gets above the dragon, then I'll just put the rest of the swing position back on. But I want to see what this position does before. Well, I end up selling this, selling the swing position later because it just went down from here. So I end up not putting. I do not have a swing position on in Tesla right now. I'd like to put one back on, but I want to see what happens with volatility this week. So that's core and turbo in Tesla. Deciding to get out of a trade that's been working so well for a reasonably long period of time. I mean, this is the trade back in here from 380. And so that's been a really good trade. But, at the peak of the summer and pushing Z3 and starting to roll over at 600 from 380, it was like, all right, I can take a hint. So now I would love to get back into this thing anywhere north of about, I would say, like about 480. Anywhere in here is reasonable recovery room, and it can still resume. But if it gets below about 480, now it's now going to break into this long-term doldrums. So I really want to get like a Kata 2 in this position up in here. Okay, so that's my take on Tesla. I just think that it cracked today. Yeah. Now, when we go to the hourly chart, you can see the magnitude of that harsh sell-off. It was coming all the way back to the Bollinger Band mean. I'm not going to take that kind of heat. That is that price action on those two bars is materially different than anything we've seen since all the way back here, when it got all the way back to 380, which is what triggered our buys in the first place, here and then over and here. So this just felt like it cracked today. The truth changed. All right, let's go to the next trade. So Bitcoin was another one we got out of today when it crossed below the VWAP. And what I want to just demonstrate here is that even though we're out of the swing trade in this region, we got in at 19.5 last week, and so we're out around 22.5. This one just felt like a natural intraday trade to start building up the Bitcoin swing position again. And so this is just, there's your winter. Here's the RLXD, the PSAR flip, the long entry with about a 30-cent risk, and then just taking a logical piece of that when it comes back, when it peaks and comes back to the VWAP. That just seemed like a natural opportunity trade. And so when you get these nice long moves like that, to me, I would just as soon make some bricks and keep making bank and trying not to lose my mind. Now that it feels like these things have peaked and the runaway parabolic moves are over, I've shifted my orientation now to becoming that kind of channel trader once more. And in principle, my general strategy is going to try to do this. Let's see if I can get my sketch up here. So for me, psychologically, I find it easier to trade inside a trading range. That when these things break out, and I want to see that there was like a Z3 pinch in that trading range, and it was really tight, and then see the range expansion. And then when the breakout happens, maybe I can tag along like this. And when those parabolic moves are happening, that's where initially you're tracking with the PSAR move, but that is sort of limited by that 0.12 acceleration factor. So if this thing is accelerating much more than normal, that gap between the PSAR and the price gets too big, and that's where you got to start looking at. Well, I got to start looking at the dragon now, and maybe I'm using the top side of the dragon or the bottom of the dragon. So there are now a couple different places you can look, and at some point you even have to start looking like when this gets up, when this thing is riding along the Z3 line, and then you see a pattern like you had price moving up, and then you get a big gap up, and it's already past the Z3 line. You get a big gap up, and then that thing just starts rolling down. That's what the end of a move looks like. And that's what got me out of Tesla and got me out of Bitcoin. That this move up had been so good for so long that, Herb Stein used to say, if it can't go on forever, then it will stop. Truer words never spoken. So seeing where price is with respect to the Z3 lines, just keep in mind that when you have price moving along and then starts making an expansion move, at some point you have like a Z3, a Z2, a Z1, and then the Bollinger Band mean. And so you got these, a move right along the Z3 is really extreme. This is really good. This is good. This is above average. This is just, mucking along. So depending on how that thing is expanding, gives you some sense of the energy that's behind it. And you love to see, I love to see it riding the Z2 line because that seems more sustainable. But then that last gasp, you'll see that expansion and it gets past Z3. And then this is where you got to be preserving those profits. And that's what happened here. So I almost feel better and more professional. It's easier for me to feel professional when this thing has had its run and it comes back into the previous trading range. Now, what I can think of is, well, if that represents the river, let's just say, and that's the Bollinger Band mean, any retracement that comes back here and then resumes that's north of that Bollinger Band mean is going to be a continuation of that previous strong move up. It's not really until it gets below the Bollinger Band mean that it's now a cause for concern. And then if that rascal, if it comes down here and recovers, I can still get that, supported spring crossing. But now if it's breaking out below Z-1, then that whole trading range failed, and now it's feeling this way, and now there's probably collapsing dragons and those kinds of patterns on the way down. So inside that trading range is the possibility of calibrating the moves. Like if I can buy it here and my risk is here, so now I have a risk of 1, and I can see 2 units of reward, in this case poorly drawn, 3 units of reward, 1, 2, 3, just to the top of the trading range, then I feel like that is a nice tactical frameable trade. It's finding support where it's supposed to. The longer term trend is still in effect. It has pulled back, and so and then started to reverse. So everybody who was going to sell sold, and now you're seeing buying pressure come in, buying on dips, and then that's easy to believe in. The next test then is what happens when it comes back to the top of the trading range. Does it fail? Oh, easy. 2-hour battle drill. 2-hour battle drill, the thing that you watch every day. But then if it breaks through, then you can get your stop somewhere in here that you've been managing it. You can get that above, and now all this is gravy. So the concept behind that 2-hour battle drill is what happens when you're back inside this big trading range, and that almost feels like what's in our near future. Okay, so those are the 2 trades I wanted to cover today. All right, let's look at just a quick run through the daily report, give you time to prepare. Okay. So bullish quiet, that's very good on the long side. Bullish quiet. It's so quiet that the risk Z is up near 2Z. And that's so abnormal that, when this thing goes from quiet back towards normal, it'll come back into bullish normal because we're so far above the 200. But this is ideal time for the long side swing trades. In spite of what I just told you that I was doing, I I acknowledge bullish clients, so I'm looking for opportunities to get my swings back on, but it's going to be with markets money. That's just me. Minus 32 on the 2-day cycle for NDX here. And that pulled the 10-day down out of overbought. But meanwhile, longer term, just all systems go. EPP and emerging markets, both on channeling. So that's going to be, especially EEM, that's going to be that's going to be I think a reasonable one to stock, because that has been the strongest of the internationals. Intel turned in a good day today with NVIDIA. Walmart was good. Home Depot was good. Energy just got smoked today. There's Energy, ExxonMobil, and Devon. Only a couple dojis in the Dow. You had Cisco with a nice move on the breakout. Let me let that come up on your screen. Cisco and Intel both had breakouts. There we go. Breakdowns included Travelers and Coke. A reasonable number of auto framers better than 2-1, including Walgreens at 4.5. There's a 551W in Merck, and a triple screen in Travelers. In the ETFs, we had gold with another breakdown. Tech had some strength today. A lot of defensive plays in the auto framers. You get gold, silver. We'll let that come up on your screen. Yeah, so you have defensive plays like gold and silver. Much of the healthcare, you got healthcare and utilities, United Health, Amgen, Procter, real estate, Coca-Cola, so the non-techs and the defensive plays today. Daily squeezes. Let's see. I think healthcare and Caterpillar are interesting in that space. The S&P is pretty close at 1.9. So again, there's still a lot of room for that thing to pop in either direction. We saw a big range today, but which recovered, so it was down and then back up. So there was a big range in both directions. So there's some hungry traders out there who took last week off and are pushing that market around right now. The weakness today has caused a number of things to fall into the fall. Actually, if I can say it that way. Still strength in the Russell and Brazil in the summer there. Tech is looking a little healthier than it did last week this time. Lots of big pain and suffering. More pain than joy when you look at the 3-day index, or the 2-day index, I should say. Japan, minus 535. Oof. I'm going to let that, yeah, minus 535 in Japan. Finance, minus 209. Latin America gave up the ghost at minus 218. So that move looks more like a culmination that finished up last week where they were so strong. That's looking more like a culmination. And back to reality. Asia less Japan with a minus 606 and emerging markets minus 454. So let's see let's see if the rest of the world is looking at that as buying opportunities, or whether the first crack in the armor today spreads wider. And that's pretty much everything I wanted to cover for tonight. This is a time to rig for heavy weather. You check your rigging and your leaks before the storm hits, but this is the calm before the storm. So make sure your stops are in place, that you have a solid risk management plan, that you're continuing to take your shots. I mean, when you see volatility has decreased this much, it's one of two things. It's either a great time to be alive for long-term, easy swing trades, or it's the time just before the storm. I think it's the time just before the storm, but we'll see how that goes. Okay. That's everything I got for you tonight. I'll get this published and posted. And that's all I got. Okay. Take good care. So be on the lookout for, I was neglectful this weekend, the Bill Scheitz Traders drumming album that we did the collaboration on is ready for sale. I think I'm going to offer it for $100 for the album, and give you a 3-to-1, a 3R win on that. It'll count as a $300 discount coupon for any courses or any special products. So, it's a good deal. I think it'll be $300 off coaching for next year. All right, that's everything I got for you. Be on the lookout for that announcement. I'm going to try to get it tonight if I can. And we will see you ready to rock tomorrow.